Hello and welcome to What the Papers Say, a regular roundup of all the top insurance stories across the trade press. I'm Martin Friel, Editor of Insurance Edge, and joining me today is Alasdair Stewart, Head of Corporate Development at the CII, and David Worsfold, Group Editorial Services Director at Incisive Media. Thank you both for joining us. David, the obvious big story at the moment is regulation and what George Osborne has got in plans for the FSA. Now he criticised the previous tripartite system. Now he's proposing that it comes under the Treasury, Consumer Protection Agency and the Economic Crime Agency. Is that not again just the same thing, a tripartite system? How do you see it?
Well, we're not going to get away from a multiplicity of bodies that are responsible for regulating the financial services sector. That much is clear. We never were going to, so let's park that as an issue. What's changed now? Well, we're going to have in the Bank of England an enormously powerful overseer of the markets. That's quite clear. Responsibility for macro-prudential supervision right across the sector. Now that's the very least the government had to do, I think, to start to restore consumer confidence in regulation, which has been destroyed in the last 2 or 3 years.
Mm-hmm. But what do you think more specifically this is going to mean for GI and then again more specifically for brokers?
It's going to mean a bit of fragmentation, I think, as far as the insurance industry is concerned, in that it appears that all insurance companies are going to have their micro-prudential supervision transferred to the Bank of England, whereas the intermediary sector will find itself under the rump FSA, which is going to be renamed the Consumer Protection and Markets Agency. A slight change from what was in the Conservative manifesto, which just called it a Consumer Protection Agency, which to me didn't sound like a very comfortable place for brokers to end up in an organisation that thought its raison d'etre was to protect consumers. By giving it responsibility for markets as well, I think Osborne's actually been quite clever. He's created a much more balanced organisation. That's where they're going to end up. Actually, probably not a lot will change for them, to be quite honest. You know, most of what happens to them under the FSA will happen to them in the new body as well.
And Alasdair, a little less continuity at the top of the insurance company ladder.
Yeah.
We've seen a lot of movement at Zurich, RSA, and Aviva brought in AXA. What do you think is happening here? Is this a symptom of the bottoming out of the market? People are desperate, they're just trying anything to get the business in, get rates moving? Because rates are completely flat at the moment, we see.
Yeah, I mean, I think traditionally there has been an element, or there's been a belief that a lot of movement happens at the bottom of the market. I think if you look at Zurich, there's been a reshuffle at the top there. Tony Ems has taken over Bill Payton's job at the Director of Claims. I think if you look at RSA, there's been a bit of a change there, and I see Aaron Devitt's now away over to Denmark to head up the commercial operations there. And then, of course, probably the biggest move was Ant Middle from AXA to Aviva to head up, I think it's strategic partnerships he's going to be working on there. So there is a lot of movement, and I think it could be due to the fact that companies are actually looking for ways to grow their income because times are tough, rates are low.
I mean, do you think Ant's movement over, do you think it's an indication that there's something more happening at AXA? Because we've had AXA selling the majority of its life business to Resolution recently, or in talks to, and Philippe Massot has had to defend the position of GI for AXA in the UK, so they're not going anywhere. But with Ant leaving, do you think there might be more to this?
Well, I don't know. The GI bit looks a bit alone now. I think the life and pensions mortgage side, was a significant business. I used to work at AXA many years ago, and there I'm sure at the time the global strategy was around being a big player in the markets in which you were operating. And whether they've achieved that mass or not, I don't know in the UK. The GI part of the company now, I think if I was Philippe Massot, I would be really frustrated. Every time I'm in the papers, it's defending AXA, it's telling everybody I'm not leaving and I've got no plans to sell Bluefin. And if all that's true, it must be quite a repetitive business for him to keep talking about it.
I mean, David, is it too far-fetched to think that AXA would just pull out UK wholesale?
No, I don't think it is too far-fetched, because you only have to look at how some of the the big global players behave when they find themselves frustrated in their attempts to become number one or two in a market. We had it here back in the 1990s with Generali when, after a decade of trying to break into the market, they said, no, the UK is not for us. And despite the fact they've been linked with, over the last 20 years, a number of potential acquisitions, they've just said, no, we don't think we can become one or two in that market, so we're not going to do it. I mean, AXA could make the same decision. They could just say, we've got Solvency II coming, we're going to be a bit squeezed on where we apply our capital, we're going to apply it where it's going to get us the greatest return. Is that in the UK GI market at the moment? As Alasdair said, it's been flat. The figures that Towers Watson came out with last week, it's declined for 3 years, flat for 5 quarters. There's nothing happening. So it's not inconceivable.
Okay. Just finally to wrap up, David, you wanted to pick up one that's a bit left field, really. It's about the possibility the government might actually take out insurance and transfer some of the risk to the open market. And it was brought up by the new chairman of the Parliamentary Group for Insurance and Financial Services. Yeah,
Jonathan Evans, newly elected Conservative MP for in Cardiff, former Trade Minister, MEP, knows his stuff. He's raised it as a possibility, and I think initially he sort of focused on sort of medical malpractice, which of course is a multi-billion-pound bill for the NHS, saying, well, could that cost be shifted off the public balance sheet by making it insured, which is an interesting idea. Whether there's a market there, whether there's an appetite in the market for taking on a risk like that, I don't know. But it is interesting that there's a huge amount of pressure to reduce the public sector deficit. That actually, that's an attractive way of taking several £billion out of it, because actually it isn't a cut. It's a risk transference. Is what insurance is.
Gentlemen, thank you very much for joining us, and thank you for watching. If you'd like to catch up on previous episodes and the latest broking news, go to broking.co.uk. Until the next episode, thank you and goodbye.